Now let's move on to the real estate space. According to MCO Real Estate, Lagos real estate market is finally looking up from the lows of the global credit crunch and is showing increasing strength into 2014. For more on that report just out of the company and the future of the real estate space in Lagos, I am joined by Munachi Okoye, the CEO, MCO Real Estate. Munachi, it's great to have you on the show.
Thank you.
Now we're seeing, luxury apartments sprucing up in Lagos, commercial development, hotels. So can you just start by giving us a quick overview of the Lagos real estate space?
The Lagos real estate space has definitely picked up from, let's say, 2009 to 2011. The Lagos market has always been very vibrant, but the improved economy, the investment in infrastructure from Lagos State itself is definitely bringing things to bear to improve the real estate market space. We're seeing changes, for example, on the luxury end, the luxury apartments that we used to see or that we do see in Ikoyi. For a while, all the lights were out driving through at night because they were all empty. And now we're seeing that the market is definitely picking up. We're hearing of new prices being set for the penthouse prices above $2 million for a penthouse, which is fantastic. We are seeing that the market has taken a turn, and this feeds out all the way through to the middle end. We're seeing new sales picking up again across the range, from the luxury through to the mid-range properties. The same thing with land prices. Land prices are definitely picking up again. Retail. There's a lot of opportunity in retail. There are a lot of retail spaces, new retail spaces coming up, being built in construction in the pipeline. Same with commercial office. So the market has definitely taken a turn for the better.
Let's take a closer look at some of these prices. I mean, VI being the most expensive, $2,000 per square meter, Ikoyi, yes, $1,700 per square meter. However, we hear that Lekki Phase 1 hasn't appreciated much. In fact, it's gone down 4% since September 2011. So what's going on with Lekki Phase 1? Why is that?
What's going on with Lekki Phase 1 is you would not say that the Lekki Phase 1 market has gone down, especially if you're looking to buy in the core Lekki Phase 1, which is along Admiralty. Their prices have definitely gone up because Admiralty is becoming a commercial hub for the area. On top of that, you have the new link bridge. Also, you're seeing high-rise apartments mirroring what you have in Ikoyi coming up on this side of Lekki Phase 1. So along that route, you're going to find prices have gone up considerably. What is happening in the wider Lekki Phase 1 area is that there's a fair amount of supply beyond just the core Lekki Phase 1. As you move further afield, there is a lot of land still available. So that is putting a damper on the wider average of Lekki Phase 1 prices.
So do you think that the prices in maybe the core area of Admiralty or on Admiralty, do you think those prices are going to go up to maybe as high as Ikoyi, being that there's now that very short link bridge?
Not as high as Ikoyi, because Ikoyi has a very long history. Ikoyi is an international market. Ikoyi has been known for a long time. There are a lot of corporate occupiers that would only take Ikoyi space. So Lekki Phase 1 is not quite the same market as Ikoyi.
Now, some people may say that some of these prices in Lagos are expensive. I mean, when we look at some of the most expensive roads here, $3,213 per square meter. That's in VI. In Kingsway Road, we also have $3,012 per square meter. So, in comparison to some of, London, New York, you get these kind of prices. So many people say, definitely, real estate in Lagos is overpriced. What's your opinion?
My opinion is that just as in any liberal market, it's supply and demand. Where the demand is there, the prices go up. There's limited supply. Adilo Deku is a core commercial nerve center of Lagos. So it's very much in demand, and that sets the prices. So not to say they're overpriced. Everybody wants to be in Lagos, in the whole of Africa.
So everybody wants to be on Adeola Odeku?
Yes, well, commercially.
Commercially.
Yes.
Now, I mean, you mentioned demand. Now we're seeing housing estates coming up, especially along Lekki Expressway.
Yes.
I mean, there's so many, literally.
Yes.
I used to live, there. years ago, and I remember when I used to drive down, I'd look back and I wouldn't see anybody on the road. In fact, it was really scary. You know, we'd be looking back and thinking, oh my goodness, I hope no one is following us. Now it's inundated with people, inundated with the estate, and it looks like there's more coming up. Do you think that there's enough demand though?
There is definitely enough demand. As you can see, as you've said, there are more coming up. Every week you'll see a signpost for a new estate. The infrastructure is good, although it's just the single core road. Also, we find that the area, the axis, there's a lot of infrastructure going in. On one side, it leads into VI, which is the commercial hub. On the other side, we have the development of the new airport, the free trade zone, the seaport, and these two hubs on either side makes it very attractive for any developer to move into that. So even that
is gonna boost price in that area. I mean, when those come up. Now let's talk about the retail market. Woolworths recently announced that they plan to exit the Nigeria business. One of the things that they cited as a reason was high rent. Now, do you think that with the rental prices we have here, I mean, we have prime rates, rents here, $1,800 per square meter for shops in Lagos. Do you think that in order to attract more international brands to Lagos, that these rents in the retail space need to come down?
Once again, it's a free market. You can't legislate for rents to come down. The rents are set because of the demand and because of the supply. What one would ideally look at is why there are not enough shopping centres of an international standard and bringing more into the market, and these will bring down the rents.
Now, I want to quickly touch on the hospitality sector. We're seeing so many, hotel brands in Lagos with Intercontinental, Radisson, Sun International. We have Transcorp saying that they're going to develop a new Hilton hotel as well coming up, I believe. Pretty soon. Now we have standard rooms averaging $385 per night. Now with some of the reforms that are coming up in the the power sector, for example, I believe that some of these hotels, well, the hope is that we'll get to a point where we have 24/7 electricity, and maybe these hotels won't have to spend so much on diesel to run their businesses. So do you think that we will then start to see maybe rents for some of these rooms coming down?
No, I don't think so. Hell will probably freeze over first before prices come down. I think if these reforms, as they do take place, it's going to be a huge boost to the economy. Power, for example, is going to create a lot of employment. There's going to be a lot of commercial activity, and this also drives prices up, rents up. So as much as there may be 24/7 power, hoteliers will not like to bring down their rates. They'd rather like to see them go up.
Munachi, thank you for coming on this show and joining us. Very interesting discussion there. That's Munachi Okoye, the CEO of MCO Real Estate.